Hello, everyone. This is Sebastian McMahon from IA Financial Group, and I'm back with another weekly economic review, this time for the week ending June 23rd, 2022. So recording on Thursday because on Friday it's holidays here in the province of Quebec. And so same thing next week. The next review will be published on Thursday, June 30th. So look at this week's markets at the close on Wednesday this time. So as you can see, less red on the screen for the week. Interest rates rallying a little bit during the week, meaning that you have positive returns for bonds. If you look at the stock market, then you have positive returns on the week in Canada and the US, more strongly in the US, of course, but we have a bit of a relief rally, or let's say a bear market rally, following a very tough stretch, about minus 10% in 5 days over the last few weeks. So maybe a bit of a rally there. We're still looking at the spread between Canada and the US. So there's an outperformance to the downside, but still an outperformance of about 10% from the S&P TSX versus the S&P 500 year to date. So let's see if that holds, because as you can see, the price of gas of oil, not gasoline, but oil, has been pressured lower with prospects for slower global economic growth. So this is weighing on the price of oil, and of course this leads to maybe an underperformance of the TSX. So let's see how much that can the outperformance of the TSX can contract. So this is a point of emphasis for us. Canadian dollar was higher on the week, euro was a bit higher too, and the price of gold went nowhere. So maybe a focus here on inflation, since this is the topic of the week. So inflation is now at a 40-year high in Canada. It used to be a 30-year high, now it's 40, so back to the early 1980s, at 7.7%. So one component of that is that for the first time, StatCan included the price of used cars in its calculation. It's not that used car inflation just happened. I mean, it's been there for a while, but it wasn't into the official figures, and now it is. So it's more in line with what the methodology in the US. But there's also an acceleration over the short term of the price of gasoline. So as you can see in this chart here, you have three main components: transportation, shelter, and food, that are behind most of the inflationary pressures. But let's focus on gasoline. So price of gasoline, as you can see on the chart here, been accelerating quite strongly recently. The average price in Canada is about $2.05, around that level, but this hides the fact that it's about 210 to about $2.10 and $2.15 in most cities, except in Alberta, where they removed the provincial sales tax for gasoline recently. So the average price is about 192. That's where it was yesterday. So the average price outside of Alberta would be more a bit higher than what you see here, but still the moral of the story is that inflation in gasoline is causing broader inflation in Canada, and it's accelerating pretty quickly because we've had two of the last 3 months, so March and May. So the latest figure that we have here, of course, for inflation is May. The March and in May, we had a rise of 10% plus for the price of gasoline. And June, I mean, June is not over yet, but we're getting close to the end, and we're up about 7% from the levels from May. So we're seeing the price of gasoline, creating broader and broader inflation. And that's what we see in this chart here, that it used to be a story mostly about goods, the inflation story. So price of goods were rising. Now prices of goods are up about 10% year over year. But if you look at the gray line, the services sector, it used to be pretty stable compared to the price of goods, but now we're seeing an acceleration here, and the trend is pretty steep here. So the worry is that we have inflation that's harder to control because it's getting broader and broader, and there's less there's less ways that households can substitute from one good or service to another. It's pretty much everywhere, and it's harder for central banks to rein in them, because central banks, yes, they're talking about being very aggressive with rate hikes. So expect in July that we'll have probably another 75 basis points hike in Canada and in the US. So we should have very aggressive monetary policy on both sides. Now the question is, will they go beyond that? Let's say in September, they go all the way to somewhere like 3% for the leading rate. Now it's still 1.5 in Canada, 1.75 in the US. So will we go above 3%, which is above the neutral rate? It's likely, but also the other factor to take into account in the second half of the year is the global economic data is looking to be more and more downbeat, or we're seeing lots of weakness ahead. So will the economic weakness be enough to bring inflation down, and will central banks be able to pause before? That's the big question for H2. So we'll keep you posted on how we see things evolving. So what to watch next week in Canada? We'll have GDP growth for the month of April. And in the US, we'll have the manufacturing PMI from ISM, very important index, and we'll have the data on personal income and personal spending. So that wraps it up for the week. ia.ca/economy. There's some new content coming on Economy Finance 101. You can follow me on Twitter. You can follow me on LinkedIn, and you'll be able to find a copy of this PDF presentation on LinkedIn. When you get the video, it's already going to be there. So have a nice long weekend to all of those out there, or taking a few days off, or if you're based in Quebec. And I'll see you again next Thursday, June 30th, just before the long weekend in Canada. So enjoy the weekend and see you next week.